Good morning, everyone. Thank you for joining us for another edition of PE Forum Fireside Chats. Today, we have the pleasure of welcoming Danijel Višević. He's the co-founder and general partner of World Fund, a leading European climate tech VC. Danijel, thank you so much for joining us today.
Thank you very much for having me.
So, Danijel, I think it's very important, and we thank you for joining us and spending time with us today because the European VC scene or tech scene has been hit by, prominent bankruptcies, and this has sown doubt into the capacity of Europe to bring out tech champions. And as we say, victory has a single owner, but defeat has many. How do you see this impacting the VC, and how do you counter the voices that are putting a lot of doubt into the capacity of Europe to champion new tech and new startups?
Yeah, thank you very much. It's a fair question, given especially the insolvencies of Lilium and Northvolt that you are alluding to, which is, of course, things that are shedding a bad light. So three things on that. The one is it's all venture capital cases, and venture capital cases, as you know, very often fail. So when we speak about those two, we should also speak about others that are on a very successful path. So we have some climate tech giants also in Germany, for example, 1,5, or translated into 1,5, or Enpal, or Custom Cells, a battery producer, or Scilib, where we have invested, IQM Quantum Computers, who are very much focusing on climate. So companies that are progressing very well and very fast. So, of course, if you have many eggs in several baskets, we know that even if they grow big, they still can fail. Number one. Number two is that in Europe, we have a lot of R&D, but we, in climate tech especially, but we also must confess that we've been very bad in scaling, right? We can say that Northvolt started to scale. Lilium is the other case where I am comparably close to through Custom Cells. It's the company we invested in and that is producing their batteries. So here we can see that we still have not developed the instruments needed in the growth phase, where not only investors get in to invest capital, but also banks give loans, and also the state gives guarantees. So this is a reason why Lilium failed so far. It's not yet failed. I know that there are very promising negotiations going on, so I can't disclose too much, but never give up. And the third thing is that there is a huge understanding of the issues Europe has among politicians, among investors, and they are tackled. So this is the largest thing making me feel confident that I, for example, see Ursula von der Leyen, who will start office very soon with her new commission, and she exactly knows what Europe needs to do. It's written in the Draghi report, all commissioners align, European countries align. I'm very, very sure, especially after Trump being elected, that Europe will do what it needs to do, which means scale its startups and scale-ups to huge corporations.
And so to follow up on what you mentioned, because exactly what you said, tech and VC is risky, inherently risky. What lessons do we take out of these cases for a VC, and how do you exactly manage your portfolio? How do you manage that, especially when you're in a single focused theme like climate tech, for example?
Yes, many learnings here, and we should learn and look very closely. So when it comes to Lilium, there definitely is the learning, don't rely too much on politicians. Although I just alluded to politics and that I'm very optimistic, only invest and only build companies that without regulation, without politics, have a huge chance to survive because they produce cheaper products, better products, more convenient products, if it's food, healthier products. So build a product or service or software that is able to outcompete the incumbents, not because of regulations. Number two is, of course, at Northvolt, I'm not close to Northvolt, but obviously there have been huge management mistakes. Obviously, this still needs to be looked through very, very closely. So obviously also the tools they used were not giving them a good overview over their finances, and then they tried too much too fast, which can go well if you manage it well. We have many examples of companies that have been growing very fast in different spaces. So that's if you're very ambitious, a good thing to do. But when you do so, you should have the experience, and you should manage well and have the right tools and always the overview. Obviously, some management failures have been done there. This is also something that we need to look closely at and not repeat.
And so if we follow on what you're saying, it's very important. I think that, you know, where does that position Europe in terms of competitiveness? And you know, there are voices. I mean, I'm not against. It's to say that, you know, any European startup that does not have a US strategy to scale and to grow is bound to face difficulties. And so, are there, you know, at which level do we need change in Europe? Do we need change at the regulatory level to make things easier for startups to grow and for VCs such as yourself to invest and to raise funds and to move forward and to simplify, streamline things? Or do we need more entrepreneurial spirit? Where do you see, I mean, the need for Europe to be able to grow as a block and, you know, expand or maximize on the tech that you mentioned that we have?
Yes. So everything you mentioned is, of course, always better. Less bureaucracy, better regulation, more entrepreneurial spirit. I know that in the US, it's the same that the entrepreneurs and investors are asking for, and they'll never stop, as it's something what you can't have enough. But in Europe, what we need the most is a single market. This fragmentation is like a self-hindering thing in Europe that we have so many countries with different regulations. And this is also something that is tackled very much by the new Commission. We are speaking about a 28th regime, about a European Inc. So that we want to really create one market. And this is also in the Letta report, another report that was written by another former Italian prime minister like Mario Draghi, his report. So we are very much united or clear that the single market needs to happen. So this is the most important. Then, of course, if you want to grow big, you need to have a US strategy. It's a huge market. You also should have a strategy for Africa and South America as well, as it's also huge markets. So when we invest as World Fund into technologies, we always say we invest in European technologies with global applicability. And this is also why we put the climate performance potential, CPP, as a metric at the core of our investment decision, which means CPP means mainly a technology that we invest in must have the potential to save at least 100 megatons of CO2 emissions. You can't reach that only on European level. It's only a few technologies that would be able to, if you focus only on Europe, achieve that emission savings potential. You have to go global. And this is something that we clearly look at when founders, how they think, how ambitious are they? And yeah, in Europe, we have really a moment of a huge shift right now. When you live here, you can really feel it. And I'm in the venture capital and startup scene for more than 20 years now. I started as a journalist. So I spoke to many people, and I clearly see how much is changing right now at universities, working together with founders on politicians level. It's like, I don't need to explain things anymore. People ask me, how can we implement and how can we go forward? And that's a good position to be in.
And so if we take on all these things that impacted, we were in also an environment where interest rates were rising. Now we're in an environment where interest rates are going lower. How do you see that on the market dynamics of your own portfolio and of your potential investment, and how is that impacting valuation, and specifically within climate tech startup? Do you see that the trend in the coming year? How do you see it move forward?
Yeah, of course, decreasing interest rates are usually good for businesses. Also for us, when we fundraise as a fund, we raise our second fund from Q2 25 on. And of course, when interest rates are lower, it's comparably easier to fundraise. But also for those companies that we invest in that usually need also debt loans, when you have lower interest rates, of course, that helps to finance your businesses with non-dilutive capital. And this is also clearly, as you already said, the way Europe is going to go. But there are also other macro trends where you can see that Europe is going to be ahead of other continents. That's my expectation. When you see China is in a decline, it's a huge giant. Their development is super impressive, but you can clearly see that it's built on bubbles. Of course, also impressive tech development, if you look at companies like Xiaomi or also Huawei. But you can also clearly see that the politics of China has come to an end, as there will be tariffs and there will be it will be curbed. That development will be curbed, and you can see that. So China is in a decline. So there's so many numbers that you can see, and how the US will develop to be seen. I'm not, to be honest, very optimistic for the new president that he will really bring the economy up with the tariffs. So I see Europe clearly benefiting from a situation where two are struggling. And as we say in Germany, we always say, der dritte lacht. If two struggle, the third is laughing. And the third will be Europe. I'm pretty sure we will benefit very much from the position we are in. When those giants are struggling, we will just grow.
Well, that's an optimistic view. Let's hope it comes to fruition. You mentioned your fundraising. Indeed, you also at the beginning of the year, I think you exceeded expectation. You raised 300 million. How do you see today within the VC and tech in a broader aspect? The LP sentiment and the fundraising parameters and the capacity of European VCs to attract foreign LPs versus institutional European traditional.
So it's always, of course, depending on the fund. What team have you built? What investments have you done so far and before? So for World Fund, I'm very optimistic. That's also why we exceeded expectations and raised with our very first fund 300 million, because we invested before World Fund in more than 70 investments with an average multiple or valuation increase of 9.2x. So convincing numbers, mainly driven by climate tech. So we have shown that investing in European climate tech, we can make the right bets and make money out of money, so to say. And that's exactly what we did and scaled with World Fund. Now we have another huge investment opportunity in Europe when it comes to Series B. Series B is very underdeveloped when it comes to financing in Europe. There's too few large enough funds. So with our second fund, we aim for even more capital to exploit, I wanted to say, this situation. But basically it is an exploitation in terms of that you have many promising companies reaching Series B and struggling to finance themselves, although they achieved their targets, they have top teams, they have top tech. But in Europe, we have this investment gap, which we see as investment opportunity. So we have a very clear strategy. This is a strategy that also LPs understand. With our first fund also, we are exploiting this situation already. And you're also in a very good position when it comes to negotiations, when you also can support the founders with non-dilutive capital and help them get grants, which Scilab only recently got a multi-million-dollar euro grant, or with debt, then you are in a very good position. So And on an overall level, as you asked, when it comes to Europe attracting non-European capital or institutional capital, those funds need to perform. Numbers fortunately show that Europe is performing very well. What we need to improve is the exit channels. So when you look at TVPI, Europe beats the US. But usually we sell our companies to either European corporations, or we IPO them in the USA or sell them there. So this is also something where Europe is very much aware of. So when I'm speaking of the single market, it's also about stock exchanges and also improving the circumstances or the European situation for European bigger corporate or scale-ups to become corporations and be sold.
I just want to dig back on the IPO and the
Yes.
financial markets and the growth. But prior to that, do you feel that if you compare family offices or families or private money, I would say, in Europe compared to, let's say, the US or other regions, do you feel that they're more conservative when it comes to venture, or are they now the mindset has changed and they're more entrepreneurial, I would say, in their investment in venture?
Yes, on average, they are more conservative. But you can see that those who are bold, I will point out a family office from Strüngmann brothers, who have built a huge pharmaceutical company and with their wealth invested in highly risky companies like BioNTech that has developed the leading vaccine for COVID-19. Their bets mainly have worked out very well. They also invested with us together in IQM Quantum Computers, which is a company that is also developing above expectations. So I see that European family offices are learning and also jealously looking at those bold movers. And we clearly also could see when fundraising for Fund 1, we have more than 200 high net worth individuals, but because we started to fundraise there, this is what we needed to then also convince pension funds, European Investment Fund, and other institutional investors like banks to invest into our fund. But we can see that they also, it was their first bold move. And I'm sure that they're happy that they did that.
We mentioned the US, and you have sometimes a strange, let's say, a cycle that happens whereby investors don't invest in a European company, but once it opens in the US, they end up investing in the US entity. How do you think, in terms of financial markets and smoothing it out and bringing more capital to VC, should be the position of the EU in terms of regulation? What should change in your point of view, if anything, to make things better and easier?
So a few things are already underway. So in Germany, for example, we have the so-called WIN initiative, where the government brought together insurance companies and banks, and they committed to invest additional 12 billion euros until 2030 into startups and VC funds. And I've spoken only recently to some of them just to assure myself that this will stay, although the government will change in Germany. And they said, of course, that's not dependent on the government. Then second is, of course, Solvency II. So it's something we need to, when you invest into risky assets like venture capital, private equity, you have to put far too much capital aside right now to be allowed to do those investments. Even if you invest in American VCs, PEs is the same. But history has shown that it's safer, more secure than assumed years or decades ago when this was implemented. So this was also going to change. It's something also addressed by the new EU Commission and also by Germany and other countries, European countries. Yes, and what is also changing is the support from the governmental side. To mention the European Tech Champions Initiative that invests in venture capital and private equity funds with $1 billion of assets under management. 4 billion they invest in 15, I think it is, such funds. So through the European Investment Fund. So there's already, as I said, so much shifting already. I can promise in 5 years, or even less than 5 years, the financing landscape for startups and scale-ups in Europe will have dramatically changed to the good. And yeah, I'm deeply convinced because of everything that I mentioned already, and this is already going. It's not plans, it's realized or very, very close to realization.
And so if we want to take, advantage of this, change or paradigm change that is happening within climate tech, what are the, the sectors that you see? Where do you see innovation? Where do you see, and where, World Fund is investing when it comes to, climate tech today?
Yes. We invested in Silip. They have the leading battery recycling company technology. So we compared that to American, Singaporean, and other European companies and technologies. Battery recycling is something that will be needed also to secure raw materials for Europe. Second is the new generation of batteries, silicium anodes. So it's also better for the environment, higher energy density. Still some research needs to be done here, but we have leading companies in Europe and Germany that are still superior compared to the Chinese. So the mass market lithium ion, China has won. Congratulations. I wouldn't recommend any European company like Northvolt to go into this bet. That's another mistake, by the way, that has been done. So to try to compete on where Chinese are already far ahead, but the new materials, so batteries. The third thing, quantum computing, I mentioned, IQM is very much among the leaders. AI plays a crucial role. I must confess here, of course, when it comes to the large language models, China and the US are ahead, but how to use those LLMs, the use cases and companies that are built on those models. Here, Europe has already done huge steps, and we have companies like Freshflow, for example, using AI to optimize grocery stores buyings and selling. So they decrease the vegetables, etc., that you as a supermarket need to buy, while increasing the revenue with AI data that's possible. Or Edifion, a company that is in buildings, implemented in buildings, AI-driven. They learn where you use energy, although you shouldn't use it. They decrease the energy consumption of buildings within 4 weeks, between 20 and 25%, sometimes even more, which saves a lot of money and a lot of emissions. So I could go on. There's many more in the food space, alternative proteins, mycelium-based chicken, for example. So there's a lot of industries in Europe that will be the foundation of leading companies of the world.
Just to thank you, Daniel, for this highlights. Just to conclude, I just wanted to hear from you is that how do you, from, when we change the mindset, I would say, with what happened with Lilium and Northvolt, and to not have the doubting on an entire domain or sector versus, what can happen, as you mentioned, in VC with startup failing, which they fail in the US and they fail elsewhere. A message of hope, I would say.
Yeah, look at every single super successful company. Look at Google. Before Google became successful, there were many other search engines that disappeared. Look at Facebook. There were many networks, social networks that were built before Facebook prevailed and became a huge company. Look at Tesla, EV manufacturer. There were many EV manufacturers before. You need to have the right team, the right time, of course, the right tech, but everything needs to fall in place. So same is here when speaking of Northvolt. I'm very convinced that this is one episode where we will learn a lot from. And I know that we are already building the next generation of batteries, where also capital that would have flown into Northvolt will now be invested into those next generation battery manufacturers. So in a way, you can even benefit from mistakes. And this is something that I always tell even my children. Failures are your friends. You need to look closely at it, learn from the mistakes, and go the next step, fail forward. And I see not only this is not only like hope. It's something that I clearly see. Mentioning companies like Custom Cells, mentioning companies like PowerCell that are building that generation batteries in Germany, and I see the developments makes me feel very confident.
And just to conclude, because you mentioned, some of your portfolio companies and the environment, where does World Fund differentiate itself in terms of supporting or, helping? There's a lot of jokes today that, most VCs are not really giving the support. A lot of memes going on that they're not supporting their startups. Where do you see, what's the formula that you use in order to support? And we can conclude on that.
Yes. First, I must say our LPs are incredible helpers. I mentioned those 200 plus high net worth individuals, family offices, etc. They come from industry very much. They've been CEOs at Volkswagen or members of the C-level members or of BASF, the chemical giant, or other huge corporations. And I mentioned already Silent, the battery recycling company. A C-level person from BASF is an investor into our fund, and she connected the Silent management with BASF people who have built factories, and they are now employed by Salib and building a huge factory in Dormagen to recycle batteries, where they will be able to recycle 30,000 tons of batteries in 2060 starting. So our LP powerhouse, we call it, is so helping a lot our founders. Then, of course, us. I was working for Angela Merkel for 5 years. I know how politics work. I'm quite close also to EU Commission, to German government, and it's very helpful when you understand this and also know about upcoming regulations, and you can just really advise your founders very good on that. So I mentioned the grant before. When you so this is a support that we give. Then also communications. I'm sticking with myself, having been a journalist, especially deep tech founders who are very nerdy. It's very funny decks that we sometimes receive, and it's not well done, but you see that the tech is superior. If you help them even communicate better, this can make a huge difference, as I have seen too many mediocre companies conquering a whole market just because they communicate well, but I have never seen a superior tech with mediocre communications conquering a market. So this is also something where we help. And then we have, let me mention that as a last thing, a very tech-heavy team. We have biochemists, engineers, physicists, chemists, and this is a huge differentiator. Before we do an investment, we do a huge tech DD also, and help then also the company to connect with the right employees, for example. So I think we add more value than funny memes.
Danijel, thank you so much for your time and these highlights, and not a message, as you mentioned, of hope, but of a plan for Europe to grow and to become and stay competitive in terms of VC. What I personally, on the personal, hope to see more is to see more cross-border investment within Europe. So French investor investing in Germany, German investor,
Yes.
and this to continue more. There are some examples, and hopefully this will grow in the future. Once again, thank you so much.
Thank you so much.
Thank you.